Hey traders, this is Ron Haydat, Market Tamer. Happy Wednesday. Hope you're doing great. As always, nothing in this presentation shall constitute a recommendation to buy or sell any security. Trading stocks and options involves risk and specific financial issues should always be addressed with your financial advisor. SPY was down 0.2% today, almost $2. It's still above the red line. So the 20-day EMA I would continue to use as a litmus test, a line in the sand. We stay above it. The bulls are in control. Tomorrow that could change a little bit with Netflix getting sacked after hours. But we'll talk about that in a minute. Here are the Qs. They were down about 0.5%, still above their red line, and the Dow via the diamonds down just 0.4% here. Still looking good across the board. Now on to Netflix. The stock closed at 362, sort of right in the middle of its trading range, multi-month trading range since February. I pop open this panel. It's about 6:03 p.m. Eastern. It just got back above 320. It's been down $40 to $50 after hours since the report. Right now, around 320. If I go ahead and draw this in here, just to give you some idea of where we're at. That gray area right there, that's where the stock is at right now. And previously I said, hey, if it breaks below 335-ish or so, that's bad news. Well, we've done it. But the question is, where will it open up tomorrow morning at 9:30 a.m. Eastern? A lot can happen yet tonight and in pre-market tomorrow. The last sort of, if I zoom in further, area to hold is the 320 where we're at now. This little swing low is basically a three-day candle formation here. After the earnings report in January, pulled back and then it took off. We break basically where it's at now, 320 or so. There's gap fills at 300, 280, 270, and then all the way back down to the December 24th lows. This is not looking good for Netflix right now. Here is CSX. They had earnings and they got clobbered. This stock closed yesterday right around 79.55. Now it's at 71, over a 10% drop. But look where it's at. I mean, there's a little swing low here, which is where it closed. The next support level, I don't know, we could make an argument and say there's some consolidation at 65, almost 10% lower, and then way back down here. Definitely all these tops up here at 80 prove to be like a crystal ball, if you will, looking into the future saying, man, they just don't want it above 80. If it would have gotten above 80, that would have been incredibly bullish. Couldn't, now you get your drop below. So no one was really confident holding that stock above 80 up there. Now, UNP, according to Thinkorswim, they're going to have earnings tomorrow. They dropped in tandem. They are clinging to support at 164-ish. Next support 160, and then, folks, it's a massive gap fill down to the 130s. Norfolk Southern, another one trading down in tandem. They're due to have earnings according to Thinkorswim next week. Isn't this funny how the other companies like UNP and now Norfolk Southern, who didn't report, are clinging to support already after today's big down move in CSX? Well, their next support level is going to be 176, 177. Here's FedEx. They lost 2+%. They've already been in a world of hurt for a while. After starting to break out the past 3 days, it's all given back practically in one day. This one's a little harder to call for, where would it likely stop? There's support at 160, a little bit of a low here and then down here. But right now on a daily chart, FedEx is still bullish, but that could all change depending how some of these other earnings reports go. Here is UPS. What can Brown do for you, so to speak? And I'll tell you what it can do. Down 3%. Now they have earnings coming up according to Thinkorswim. If I can get in there and see it 724 about a week from now. With today's move, it closed below the red line on a pickup in volume. The 50-day is a natural inflection point around $100 plus $100, big fat round number. Then it's 97.50 and then down here. FedEx and UPS are a little harder technically to trade. I think UNP and Norfolk Southern, they are right at support. They lose those support levels, it's a lot uglier. And then here's IYT, the Transports ETF. It lost over 3.5% today. It still does have higher lows intact. So maybe if this thing wants to stop on a dime, that can be possible. But, 185, 182, and then back down here would be the targets. eBay and IBM, two more companies with earnings. eBay finished the day at 39. If I go after hours, we can see it's about 41. It's going to be potentially, if we look at all the data, it's not going to be at all-time highs, but it's going to be a little bit of a breakout over this recent range. But we'll see what happens tomorrow. And then IBM closed the day at 143. We pop this open. We take a look how IBM is trading. And down like $2-3. It's not much of a move. So if I zoom in here, where is 141? Well, it's right here at the 20-day. If IBM were to close tomorrow below the red line, just like I said about the S&P and the NASDAQ and the diamonds, then we would go down to the next moving average, which is the 50-day. That would be the target. Right now, it's right on the cusp of potentially rolling over technically. Now, gold, silver, miners, really quick here. Gold's moving nicely. Gold popped out of its pennant today. Decent volume too. This would classify as a breakout, not just because of the pretty little picture. And in fact, if I want to make this even, let's say more accurate, I could do something like that, because with trend lines, you want to connect 3 dots ideally. This is a clean break, pick up in volume, and its new closing highs. It even closed above this close here on 625. That's a breakout. Silver, remember I told you guys to watch silver? See if we break this trend line. It happened Monday, Tuesday, Wednesday, big volume coming in. If I zoom out, there's this little double top up here around 15.15, give or take a few pennies, whatever you want to call it. That's the target right now. If we look at SIL, the silver miners, they had a good day, rising over 4.5%. We broke out here, pop up, took out the previous highs. I'm going to have to go back 2 years now on SIL and say, whoa, probably 29, it's 60 more cents, about 2 more percent, and then up there towards 31. And then I highlighted PAAS, which was Pan American Silver, another 6+% move today. It's already at some of these other peaks. If it clears 15.50, then I'd say somewhere between 17 and a quarter to $18 would be the target. They are getting a little overextended in the short term, but this is what mining stocks can do. They can really go nuts. And the emails keep coming and asking for one more chance. So here's the deal. Today's Wednesday. This Friday, the 19th, in 2 days, I'm going to hold one final event to see the next top 10 hottest stocks for the summer. Over some of these past events, I've shown you stocks like NASDAQ, NDAQ. Do you remember this? At the very end of June, beginning of July, I said, watch NASDAQ, and what happens? The stock goes bonkers the moment the calendar goes to July 1st, ends up being over 125% plus win in that short time frame, all using an at-the-money option in September. I also talked about Salesforce.com. What happened? The moment it gets above the 50-day, it just starts moving higher. We also talked about Expedia. Look at that run. It's incredible, right into earnings. The list goes on and on. I can show you Pod, another one. This one actually goes opposite the market direction in May. Remember, the market sold off hard in May, not PODD. Under Armour was another one. There was a pop there, and it's running again. So you got to register for this event. This is the last one this Friday, 12 p.m. Eastern, 9 a.m. Pacific. There's 500 seats. Invitations already going out. Spots are going fast. Go ahead and grab your spot via the email, or at the bottom of this video, there is a link. Grab it ASAP. I look forward to seeing you there. Have a great day.